Hey guys, this video is about investing in stocks. In our club, we will be learning about investing, especially with stocks. It's important that you learn how to invest because most of us do this in our life and we really don't know how to do it. We have someone else do it with our retirement accounts, our 401ks. It's really important that you do learn it so you can save yourself a lot of money and you know what you're doing and you know what your money's doing. The purpose of investing. If you leave your money in a bank account, it just sits there and it doesn't grow. But the economy and the price of items do grow. That's called inflation. So over time, the price of things go up. But if you leave your money in the bank, that money doesn't go up. So if you take it out 30 years later, it's not going to be worth the same amount as it is the day you put it in. So learning how to invest helps you stay ahead of the inflation that happens. So what are stocks? Stocks are partial ownerships in a company. It's a very small percentage. In the past, it used to be a piece of paper like you can see down here. And today it's electronic trading, and that can happen very fast. Public companies usually tend to have millions of shares. So just having one share is a very small percent. Determining the price really is depending on buying and selling. It's depending on you, what value or the people on average put on a stock. This supply and demand curve will come very familiar your senior years as you get into economics. As the supply is low, demand tends to be higher, so prices tend to be higher as well. As supply increases, prices tend to decrease because demand tends to decrease as well. So this whole supply and demand is what determines the price of a stock. Now when you look at a stock, there are certain criteria that you want to judge each company or each stock on to see if it's good or not. The main, most important one is growth. Next one, you want to look at the PE value, which I'll talk about in the next video, but that's price per earnings, and that tells you the true value of a stock. Not just the money value that you see to buy a share, but this tells you the true value. Is it good? Is it not? Debt to equity, that's important. You want a company that is not in too much debt. Return on an investment, to look to see if I invest in this, how much money am I going to get back on average. Earnings per share as well. Growth, it's very important. You want to see this with your earnings per share. You want to see that growth because, once again, picking a good stock has growth potential. Risk, there's always going to be risk when you're investing your money, but there are ways of managing that risk or limiting that risk. The higher the risk, the bigger the reward, but you can really lower that risk by making sure you do a lot of research. And the more research you do and the more homework you do on your stocks and your companies that you invest in, the lower your risk is going to be. Some examples of low risk investments are like government bonds, money markets, CDs. Middle risk, you have real estate, mutual funds, large company stocks, and then those high risk are going to be like options and futures. Won't really be doing about collectibles, or also speculative stocks is another one. So one way to really lower the risk is to make sure to do as much homework as possible and really know what you're investing in. So this is the doing your homework, so lowering that risk. You want to make sure you compare the stock you're interested in versus other stocks that are similar in the same kind of family, like a food stock, judging it versus other food companies, or a technology stock versus other technology companies. Compare the fundamentals, which I talk about in the next video as well. This is looking at the core of the business, how well they're doing. Look at news reports. Compare the analyst reports, which are given on stock website, Morningstar, you can see those. And then listening to the earnings report. And this can be quite tedious, but by doing that, you get a first-hand experience of what the company is saying or what the executives are saying about their company. So this is some homework that you can do to lower that risk with your investments. And the last thing you want to do to lower your risk is make sure you are diversified. So I mentioned earlier families of stocks. We also call those sectors. And the different ones are here like technology, healthcare, transportation, utilities, consumer cyclical, which just means that there are times that these do well or times that they don't. Non-cyclical, which we call secular, which are companies that no matter if the economy is doing bad or good, they do well, like toothpaste or toothbrushes. People are always going to want to brush their teeth, or food. Those are non-cyclical. And cyclical are going to be like cars or fashion or things that people will not spend money on if they can save money because the economy's bad. Energy as well as another sector, basic materials, financial, and conglomerates. And those are just really big companies like GE or 3M. They produce and make a lot of different things. They're kind of multiple categories within here. Got some examples here: technology, transportation, pharmaceuticals with healthcare, energy, basic materials, and energy. You want to make sure you're diversified, making sure that all your money is not invested into one sector. You want to invest into at least 4 or 5 different sectors, depending on how many stocks you're going to invest in. I advise no more than 5 to 7 stocks investing in at one time. Because when you do your homework, back on the other page, you're going to want to put in 1 hour of homework each week per stock. And that will really help lower your risk. Okay, that's it for investing, just an overview. The next video is going to be on how to pick one stock over another. Let me know if you have any questions.